Good morning. Welcome to our inaugural logistics census with Tritax EuroBox and Analytiqa. I'm Kevin Mofid. I head up European Industrial and Logistics Research for Savills. I'm going to give you a very short presentation this morning, specifically talking about the property market, what's going on in the occupational market, what's going on in the investment market, and hopefully that will help us set the scene for the results from Analytiqa of the census, and also the panel discussion that we'll have following the two presentations. So I'm going to dive into some data on the market, and then explain what I think is going to happen for the occupational market and the investment market. So first thing to say is that all of the indicators are looking really strong. In the occupational market, we've seen record levels of take-up in 2020, 26 million square meters. That was a new annual record. On the capital markets side, we've seen 39 billion euros invested in 2020, again setting a new record. Both of those trends have continued into 2021, and I'll talk about that in a bit more detail in a few slides' time. Now, just a little bit on the economy first. We all know what happened in 2020. All European economies contracted in terms of GDP. As restrictions have been eased, growth has returned across the continent. Now, some countries are doing better on the economic side of things than others, and really all the forecasts point to an increased level of growth into 2022 and beyond. And that's important because the higher levels of economic activity drive higher levels of warehouse demand across the continent. Now, that's really interesting because if we already have really strong and indeed record levels of take-up, where is that going to push us as economies come out of the restrictions even further and drive consumer demand for products, and where does that lead us into the occupational market? My suggestion would be even higher levels of demand as economies really get back into the swing of things. Now, this chart, if you've seen me present before, I've presented it many times. It's one of my favorites. But what it shows is that when online retail hit 11% in the UK, that's when the demand for warehouse space started to rise exponentially. That's when we saw take-up rise every single year. Now, I've been updating this chart for a number of years now. And as I've updated it, all of the countries, you can see there, the flags, they've crept along the online retail growth. Some of them are now ahead of 11%, which is our tipping point. Others are yet to get there. What's really interesting is we buy data in from Forrester. Forrester provide online retail growth forecasts. This is the latest data for Western Europe. What you can see here is that by 2025, the level of online retail across Europe is going to get to 25% as an average. Now, that alone means that online retailers are going to need an additional 26.3 million square meters of warehouse space. So really, you can see how much space is going to be needed just because of this accelerated growth from the online retail sector. And that growth, was happening anyway, but it's clear to say that it's been accelerated by the pandemic situation and changing consumer behavior. Now, it's not just about online retail. We've actually done this survey in the UK for the last 4 years with Tritax Symmetry and again, Analytiqa. And one of the questions we asked last year was, well, are you going to reshore? Are you going to stock higher levels of inventory because of the changes in global supply chains brought on by the pandemic? And you can see there was a strong response rate. Over a quarter of respondents said that was going to happen. Now, if that does happen, that's going to drive demand for warehouse space. We indeed actually did some research last year, and we found that for every £1 billion invested in manufacturing processes, that creates a need for an additional 175,000 square feet of warehouse space. So the ripple effect we see from the manufacturing sector is quite pronounced. So we think that's going to have a bigger impact in Eastern Europe, lower rents, lower wages, a variety of reasons. But all things considered, we can see this driving demand for warehouse space as well, complementing the growth for online retailers. Now, this has all conspired to mean that I think we're going to have another record year for logistics take-up in 2021. Take-up reached 18.3 million square meters in the first half of this year, way above the long-term average. And, all things being equal, we're going to get to a record level of take-up. Now, if we look at on a per capita basis, we can see some really interesting numbers here. Countries are performing above where we'd expect them to. The Netherlands, Czech Republic, Poland, really outperforming some of the other countries in terms of a per capita basis. And that ties in with what I've been saying. Netherlands, the gateway to Europe, along with Belgium, Poland, a real strong market, occupiers wanting to go there. And we see that in the take-up stats. Now, the problem, however, is supply. Vacancy rates across Europe now have fallen to an average of 4.6%. Even in Spain, where vacancy was trending upwards, it's now fallen. Sweden, you can see there at 2.8%. Now, the problem we have is that around the same stage in the cycle, the vacancy rate in the UK was around 12%. So what this means is that we should see a prolonged period of above average rental growth. Now, I'll explain what I mean by this. We buy in rental growth forecasts from a variety of places. These are capital economics growth, rental growth figures. And at 1.8% a year across Europe for the next 5 years, we actually think these rental growth forecasts undervalue the relationship between take-up and supply. Now, if we just look at London, take that as a case study. Over the last decade, rents in London have increased by 58%. Vacancy has been close to 2%, and take-up has been growing with every year that passes. So we believe, actually, that there is no reason why rents in mainland Europe won't follow the same trajectory as they have in the UK, which is when you have low levels of vacancy and high levels of take-up, rents continue to rise. And we're beginning to see that come through now in many markets across Europe. And I believe there's little reason to suggest that won't continue to happen. Now, as we get more occupational take-up, that creates a bigger pool of product to invest in. And you can see, again, H1, 22.5 billion euros invested, a 60% increase on the 5-year average. So, the investor sentiment is following the occupational sentiment and deploying capital into the sector. All of that will conspire, I think, to continue to push yields down. Yields have fallen by an average of 45 basis points now. In many markets, they're now sub 3%. For the most prime stock, we're seeing deals sub 3%. So all things being equal, the occupational market conditions are continuing to funnel capital into the logistics sector. That's driving volumes and will continue to push rents downward. So that's it from me. A very whistle-stop tour of some of the big property themes at the moment. But generally speaking, you can see how the market is positioned. Low vacancy, high demand, high investor sentiment, lots of money flowing into the sector, being deployed, which will continue to push yields downwards. So that's me. Thank you very much. I'll now hand over to Mark, who will present the results of the census, and we'll then move on to the panel discussion. Thank you very much.